Welcome back to another edition of Special Situations Investing with Greg. I'm your host, Greg, and this week I am talking about the warrant exchange offer from Paya Holdings. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. So the Paya warrant exchange offer. As I was digging through my different things that I've looked at this week, I thought this one was an interesting one. I don't know if it's necessarily investable. However, I think it's interesting to spend a little bit of time just looking at it. So most of the time after a SPAC occurs, there's usually a warrant exchange for a company that looks like it's going to be a good going concern. And in this case, the company is Paya Holdings, and they're knocking out all of their warrants from their own SPAC that occurred earlier this year. And they're doing a conversion rate of 0.26 shares of Paya, ticker symbol PAYA, for every warrant out there. Now, normally these warrants, they would be able to convert them at $11.50 a share. And most of the time when a company decides that they want to knock out the warrants, it usually means it's a good opportunity for a longer term investor. I'm looking at this one and just going to kind of divulge my thoughts on it for you and your own perspectives on it. So this warrant exchange offer is good until the 10th of September. And like I said, it was for 0.26 shares for every warrant that is exchanged in this. Paya is a very small company. It's very similar to like PayPal, a very similar business model like that. They do a lot of ACH transactions and front-end transactions or end-to-end transactions for companies. They have about 1% this size of revenue as PayPal. So we're talking about a very small PayPal company. In this winner-take-all corporate landscape, it may not be that they actually exist over a long term, but at the size that they are, I could definitely see that in the future, if they differentiate themselves enough or they have a good enough client base, that they would be purchased by a larger company like PayPal. It does look like a company that might have some level of stickiness with its customers over the past years that it had in the SEC filing. It did show that they have had some pretty consistent revenues over their time as you look through the past 3 years. When a company cleans up its balance sheet, when it cleans up its equity, this usually means, in my view, that the company is going to go on and do some pretty good things. And I saw that I see that with Shift. I saw that with Atlas Technical Consultants, and I also see that with Paya Holdings. However, it doesn't look like it's growing as fast as 15%. And so even with the COVID closures and a lot of online payments, this company did not grow at that pace. And so something to pay attention to if you are interested in holding it for a long time. I'm not going to tell you that this is not a good business. In fact, when compared to my good business metric compared to like PayPal, it's about twice as good at generating cash out of all all of the assets that are required. So their EBIT over net working capital is about twice as good as that of PayPal, and they are currently valued at about half of that of PayPal and half of most of the other big players in the industry like Square, etc. I looked at PayPal and Square and Fidelity's business that is like this, and then noticed that all of them it's lower than those. It's almost priced about where Square is, and it is priced a little bit better than Accenture. So looking at all these different companies that have a similar type of business where they're trying to take care of the IT services for a company or the payment options for a company, it seems like it's pretty fairly valued, especially since it's a smaller player in the industry. And I'm not too excited about purchasing at this time. However, if it does drop and I'm able to get warrants for, say, a 20% discount of where they are right now they're trading at about $2.60, I would be interested, because I think that they are definitely, it might be an interesting short-term trade. With that being said, I would like to share one final thing before I sum up. This last week, I published my perspectives on some of the more interesting things that I've seen over the past year and a half or so of participating in special situations, and I found two of the things that I thought were most interesting, and I published them on Seeking Alpha. If you're interested in learning more about some of the things that or you wanted to see my thoughts and how I'm thinking about some of the things that I've learned over the past year and a half of participating in special situations, you can check it out, and I'll make sure that there's a link posted below. Thanks a bunch, guys, and we'll catch you next week.